This is the Get Greater podcast, maximising finances for university students thanks to the University of Newcastle and Greater Bank.
This is the Get Greater podcast.
General advice in this podcast has been prepared without taking into account your objectives, financial situation or needs. Before acting on any advice, consider its appropriateness. Consider the relevant disclosure documents, which include the product disclosure statements, any financial products, and seek advice from a licensed financial advisor to decide what is right for you.
Whilst we cannot give you any specific advice, here are some examples that may help you gain a better understanding of banking so you can make better choices.
The University of Newcastle Finance Academy and the Greater Bank presents Get Greater, a podcast about maximising your finances during your time as a University of Newcastle student. Tips and tricks about how to save better, spend smarter and invest wiser. This episode of Get Greater will be talking about investing. So my name is Curtis. I have two of my very good friends with me here. I have
Zach?
Hey Zach. And who else have we got?
I'm Julia.
Oh,
Good to see you, Curtis.
Yeah.
And
Wow.
Zach.
Thanks for having us, Curtis.
Oh, that's all right. You're welcome. Anytime, guys. Anytime. So today we're going to be talking about investing. Investing's a little bit of a tough topic, very difficult, especially for younger people to get into. So I just want to ask you guys what you do when it comes to investing. What are your strategies? What do you look at? And what's something that us as university students can take on board? So Julia, do you have anything?
For sure, I'd consider myself more of a low risk and passive sort of investor, just because I'm not earning a lot while I'm at university, and I feel like all those dollars that I make, they're not many, so I want to really value them. So one of the things I do, I have an app that automatically rounds up transactions, and that'll put that in a separate account for me. So it's sort of like I'm investing without knowing it. I can pick what level of risk I want those smaller bits invested in. And because I don't like risk, I'm happy with those smaller amounts and happy to play around in that way. But my other favourite strategy is super. And a lot of people don't consider that investing, but I really do, because it's investing in myself for the future. And the power of compound interest, the returns I'm going to see on that are really huge. Yeah. So they're definitely two of my favourite ways.
Yeah, absolutely. And Zach, you have a different strategy, I believe.
Yeah, well, I'm like Julia. I'm a bit more a risk taker. I like a bit more risk. And so while I have, I invest, I do the roundup as well. So I use that. That's a really easy way of kind of investing. It's set and forget. It just builds up little by little. Yep. But I like in my super, for example, as Julie mentioned, you can pick your risk. I like more a high risk. But with the high risk comes high returns. Yeah. But there's also more risk. You can actually lose a lot more money. So you got to be very safe in making sure that what you're doing is correct for you. Yeah. I like that. I also like investing in stocks. I have a little bit of a stock portfolio I use. And that's, again, something where there is low-risk stocks, there is high-risk stocks. The high-risk stocks, the advantage is making more money quickly, but these stocks can also lose a lot of money very quickly. Low-risk stocks are better in terms of, you hopefully have little risk but little returns. It's something I like to get in the stock market. But honestly depends on how much money you have and how much money you're willing to invest.
When you're going to invest, like that terrifies me, that concept of not knowing not only if you're going to make money, but it could just all disappear in a matter of days or minutes. Yep. So, how do you know what company to put all of your money in? You're just betting on one horse? What are you doing?
No, I think some people do that, and that depends on, you've got to do a bit of research. Sure. I really like doing my research and making sure what I'm doing is right for me. What's right for me is probably not right for everyone. But no, I definitely don't put all my money into one company. Some people think that's a good strategy. For myself, that isn't. I just do research. There's some higher risk companies which I find attractive because I can put some money in and, I'm hoping from the research I've done that they're going to go better and therefore I'll make a bit more money off it. But in saying that, I still have money in low risk stocks. So I'm not having to have I'm not still in high risk. I'm making sure that I am making little gains, hopefully. But yeah, it's something you need to research yourself and don't just put money into something because someone else says you should. Make an informed decision, do some research yourself, because no money is easy money. You're never going to if someone tells you something make sure you do your own research.
Yeah, I've heard the phrase, if it sounds too good to be true, it probably is.
Yeah, I agree.
I think that's probably the most true in investing out of all contexts, for sure.
Definitely something to look into, and make sure that you're making your own decisions. Again, someone might tell you to invest in a stock. It might not be right for you. It might be too high risk. There's a lot of downside if it does lose money. You could lose a lot of money. So be careful with your investing.
It's sort of like that uncle. There's always one uncle at the barbecue that comes over and says, "Have you heard about this stock?"
Yeah.
Lately, it's been with my uncle. It's been cryptocurrency, and he just cashed out with a loss, and that was him. It's not necessarily what's going to happen to everyone, but it's definitely people thinking they hear about something really exciting, dive in, don't do their research, and it looks like the return's looking good, and then next minute, it can be all gone.
And that can show how much investments can fluctuate. Different cryptocurrencies, sort of a little bit of a bubble for a bit, where their value went up and up and up, and people thought that was never going to change. It was going to keep on going like that, and then one day they started to go down, and people invested a lot of money, and some people lost a lot of money.
Yeah.
Sure.
So
that's why it's good to diversify stocks. So having high risk, having low risk, having a bit of every kind of industry as well. A lot of people that put their money into cryptocurrencies, lost a lot of money because that's what they put it into.
Yeah.
I think a lot of people saw that as an easy way to make money.
Yeah.
And it was at the start, but then it all came crashing down. Yeah. And a lot of people lost a lot of money, like your uncle.
Yeah. I've heard a few horror stories too of people not implementing two-factor authentication or choosing a password that wasn't quite secure, and their cryptocurrency accounts just becoming emptied because they didn't take proper precautions. And I'm sure that happens in other areas of investment too. But not only that, there's that scam risk as well. So how do you sort of protect yourself against that sort of stuff?
Yeah, I think it's tough. It's obviously having a strong password, making sure that you do have like your two-factor, so you have your phone number in for all your security. If you get a text and it's not you, then making sure that you're making sure how to protect yourself from that. But that's one big risk, especially with all your investments. You don't want to have an easy password. You don't have ABC123 Curtis.
That's not my password anymore. So if you're going to try it, go.
But I think you just need to be wary, especially these days. If you lose your phone, a lot of data's on your phone. That if it's it's open, the online world, a lot of people can take a lot of money from you. Yeah,
absolutely.
Julia mentioned being invested in a few low risk stocks, and Zach has some high risk, some low risk, is diversified. How do you guys invest in different stocks? How would I go about, say, investing in a company?
For sure, and this is one of those areas that I was happy to take advice from family members, not from that specific uncle, but is being introduced to the process. So if they have a broker they like, if they have an account that they use and have found really good, I think that's the space, not the specific stocks, but helping me get set up. So that's how I did it, and I actually just go through the Australian Stock Exchange and do it that old school traditional way, but it has become a lot easier online.
Yes.
And the ASX website steps you through, and it really tells you about all the risks, and it's actually really important to read through all of that. We often just click the terms and conditions, but this is in one specific area that you should definitely not do that.
Save a stamp. Drop us an email to tell us what you want to learn about your finances. financeacademy@newcastle.edu.au.
So Julia, you mentioned super before. I think a few of us with jobs might know that some of our money gets taken away and put into super. What exactly is super?
Sure. So it's a compulsory amount of money that your employer, if you're an employee, has to pay into an account that you can't touch until you retire.
Okay.
Is it on top of your wage or is it part of your wage?
It depends on the contract, how they phrase it.
Okay.
But you get your wage plus super. Some people say, $60,000 per annum, including super. Mm-hmm. So it just depends how it's phrased. Okay. But you don't get paid less as a result of getting super.
Okay, that's good to know.
It's a percentage of your wage on top. The thing with super is that it doesn't have that immediate payoff, and that was the tough thing for me to get over in the beginning. The advice I received from my dear mother was, when you start working, just put $10 a week into super because you won't notice it gone. And I set that up as an automatic transaction, and that's worked so well for me.
Yep.
The thing with it is you actually have some control with it. So you can actually log into your super fund. They usually have a member portal. Yep. And you can pick that level of risk that Zach was talking about earlier. But also there's things like life insurance and total and permanent disability insurance that you may want to keep in there. But for me, at this young age, I took my life insurance out. So, or you can lower and raise your level of cover. So you have all that freedom. I think it's really important to be active just in your super if you do nothing else, to just be aware because you're being charged things are being taken out, added in, and it's your future. So I think it's important to just have a look at. Do you do much stuff in your super, Zach?
Yeah, so I think I've definitely over the past year changed my risk profile in my super.
Sure.
I've definitely got a bit more risky. I think at my young age, I'm kind of the same. I've taken off my health cover, and I feel that at this young age, I just want to build my super as much as I can. I kind of can afford a little bit if there is, a bit less. If it does go down a little bit, I've still got time to obviously regenerate that. Another thing I found with super recently, which I had kind of been oblivious to, is with all the kind of casual jobs I'd had over the previous years, I'd had all different super accounts. And so all these super accounts were charging, administration fees and fees and fees and fees and fees. Yeah. And so across these, I think I had 4 superannuation accounts. I was paying a ridiculous amount in fees. But I ended up combining them all, which is, I found really easy to do actually. You can do it through the ATO, or you can go to one of your super, whichever one you want to keep, and just they'll do it for you. But now it's all in one account. I'm only paying one fee.
And it's much easier
it's much
handle
easier
as well.
Yeah. So I know how much I've got, how much I'm working with, and having it obviously in a big lump sum. The more I can invest at a bigger lump sum, the more I'm hopefully going to get as a return. So yeah, something that definitely I think a lot of people don't realise is that if you come out with 3 or 4 super accounts, combining them is really good because not only are you saving on fees, but you're hopefully with that bigger lump sum getting a higher return.
Yeah, more interest from that.
Yeah, exactly.
And in terms of those contributions, do you make contributions yourself or do you more leave it to your employer?
So I let my employer do most of the contributing, but I do contribute a bit. I think the government does contribute up to $1,500.
So it's 50% of your contributions up to $1,000.
Okay.
Yeah, but it depends on your income. So the more you earn, it sort of gets scaled down.
Okay.
But for most of us uni students, that's awesome. So if you invest 1,000 over a year, they'll put 500 in as well on top.
So it's basically free money then.
Exactly right. Exactly right. And the best thing about that is that's what I've been doing. And the ATO, when you lodge your tax return, they just put that money straight in. There's no extra forms, no extra paperwork. They go, how much have you contributed? And they match that payment.
Well, okay, that's good to know. That's something handy. I guess we won't see that money for a while, but down the track, that might be worth that $500. Might be worth a lot more.
Absolutely, and if you're watching those investments going up and down in there, it could be quite satisfying.
Yes, it could. You're right.
Rate and review us. It doesn't cost a cent. Do it now, wherever you listen.
So, Julie, you were saying something earlier about super and contributions being a lower tax rate than regular income.
Absolutely.
For us uneducated, for us that might be a little bit uneducated about that sort of stuff, please explain.
Sure. So another thing I like about super is that when you receive that as income, you can only be taxed on 15%. So if you think about your normal income, you're in your marginal. So if you're under this year 18,500 or 900, you're not taxed at all, and then it goes up from there.
Yep. With
super, maximum 15%, and there are different. Again, depending on your income, you've got to check the figures every single income tax year. But the beauty of it is you're going to be saving money in tax in the long term as well.
All right, so I've heard about investing and starting to investing, and I've heard the ETF before, but I'm not 100% sure what that means. So want to explain that to me?
Basically, it's the way I picture it is, say, Curtis, you're a fund.
Yes, I am.
And Curtis, you have stocks in all these companies.
Okay.
And Curtis goes, I'm going to make a KTF, a Curtis Traded Fund. And I can I can buy a share of KTF. So I can buy a share and you have all these companies. So I get a little slice. I don't buy the company per se. I buy into your fund.
Okay.
And then basically you get a percentage return of, they split up. So there's like 1,000 shares in the KTF.
Yep.
Then once you've decided what your profit is or whatever, then you get it paid out.
Yeah, as a dividend.
Yes. So it's a dividend, and then you can sell your KTF again like a share.
So you guys have been talking a lot about researching stocks. What is that, and how could someone research stocks?
Well, there's a lot of ways to research, I'd say. The first one I normally do is I find a company that I know already, whether that be, for an example, Nike. Everyone knows Nike, or a company that you know, a company you like. And I then go and look at their financial reports. Look at maybe a good way is looking at what other analysts, so people that actually are in the industry, what they think about the stock or the company. So you'll normally find a fund will have either a buy, sell, or hold rating on a stock.
Okay.
Buy meaning good time to buy, hold meaning keep the stock, sell meaning it's probably a good time to sell because they predict it may actually lose value.
Okay.
So that's one of the things I take into consideration. Obviously, professionals, they normally know what they're doing, you'd hope. And that's a good indicator. Another good indicator is actually just looking at their share price over, a year or two. I normally look at and just see where they've trended. If they're trending, up,
Probably a good sign.
Normally a good sign.
Yeah.
They're trending down. Really not a good sign. But again, it's reading articles. Some companies might have a product that's coming out soon, which might be a good indicative. It might go either way. But if the product's successful, that hopefully means the share price will go up. If it's not successful, it'll go down. But yeah, just looking at focusing on a company, maybe focusing on an industry, and getting to know that and be comfortable kind of knowing the big players and knowing where you're going to be putting your money.
And so how would I find a financial report?
Oh, good question. So normally on their website, the company's website, there'll be a page or a contact us or their financial report if they're a public company.
Yep.
They're a private company. They don't have to disclose their financial reports.
They don't.
No.
And it's not often easy to buy into
into a private company.
Yeah. So if they're offering that to you, you can specifically ask for that in return anyhow.
But otherwise the Australian Stock Exchange, normally if you search a company on there, it'll have a page or a link or a section where you can actually find all the annual reports, and they're all publicly available if they are traded on the ASX.
Broadly, if there's an investment that's sounding quite good but you haven't heard of it before, or someone in your family hasn't heard of it before, there is a financial regulator called APRA, APRA, and they have a portal on their website where
What's
you can
that stand for, Julia? Can you let me know?
Australian Prudential Regulation Authority.
Does it?
You'd believe me, I said it with confidence.
I believe it. Yeah.
And you can actually go onto their website and search for an investment, and they will tell you if it's legitimate and regulated by them or not. It doesn't take all the risk out, but it gives you a certain level of protection. And I like to do that to see whether things are legitimate or not. It's sometimes really hard to tell, especially around good marketing, when you're actually getting scammed or ripped off.
That's good. Yeah, that's a good thing, I think, for people that are just getting into the industry as well, investing. It kind of gives them a bit of not a guarantee, but it gives them a bit of satisfaction that this is a legitimate investment. And
I think over the years, once you start investing more, it's like anything else, and you get better at it, and then you start to learn the signs of what's promising, what's a bit dodgy looking, and you can start to adjust your approach. Yeah,
it's kind of like anything, like being at uni. First year, you don't know much.
No, you always forget your pen.
Yeah, you forget your pen, you don't know what's going on.
If you're like me, second year, don't know much.
Third year, hopefully a bit more. Hopefully a bit more.
Yeah, maybe.
And then by fourth year, you hopefully have it worked out, kind of like investing.
Yeah.
You hope, hopefully.
My goodness, that's a good metaphor.
Yeah, there we go.
Exactly right.
And I did look it up. She was right.
She was right.
She was right with the acronym.
10 points to Julia.
Yeah.
Thank you.
But I've forgotten what it was. So, well, thank you very much. I've certainly learned a lot. This has been very helpful. But before we go, I was just wondering if either of you guys had one tip for the listeners out there to that they might be able to take away from this and use.
Mine would definitely be don't overlook super as an investment. I know it's going to be a long time, but you will really thank yourself later on, and just take a really active approach in looking at your super. If you don't do anything else, just make sure you've only got one super account.
Okay.
That would be my top tip.
Yeah, that's a good one. Zach?
Oh, I'd say do your research. Making sure that what you're doing is an informed decision. Don't go off what other people say. Make sure it's right for you. And if you do that, you should be able to be successful, hopefully.
Okay, well, think about your super, know about your super, and do your research. Don't trust Julia's uncle. I've met him, a little bit of a shady dude. So this has been the Get Greater podcast talking about investing. Thank you all for listening, and we'll see you next time.
This is the Get Greater podcast. If you liked this podcast, invest in listening to our others. There's a lot more to learn.